you for joining us for this week's episode of CED Office Hour Live, uh, part of the programming from the Central State University Extension Cooperative Extension Service, our Community and Economic Development Program Unit. My name is Ambrose Moses, and I am one of the Extension educators. Two of my colleagues are online with us today as well. Amber Twitty and Eric Smith are also with our CED team. And this week's topic is going to be part of our series of the Business Owner's Dream Team, where we are talking about the various professionals that businesses should have as part of their internal and a team of experts: legal, accounting, banking, and insurance. And today we're going to focus on the accounting role, and our expert presenter will be Edward Dudley, Sr. He's a CPA and an MBA. And Ed, want to welcome you to our show today.
Thank you.
And could you, Ed, let's sort of start out, and I know you pretty well, but if you could give us an overview of your professional background, and I know you have some history or experience with the Internal Revenue Service prior to your practice and your CPA status and all.
Yeah. Good afternoon, everyone. I am sorry I was running late, but can you believe a car hit a pole right outside our office, and we were down electricity for about 3 or 4 hours. But in the nick of time, they sent us a message that said you were up at 1:45. So that's why I'm late. But anyway, I worked for after graduating from college. I worked for the Internal Revenue Service for 10 years. But what was exciting during that 10 years was that the last 2 years, and I was a revenue agent, office audit manager, so on and so forth, where I audited. Oh wow, did I leave you?
No, we can hear you.
Okay. Where I audited high net worth individuals and large corporations. There I had a significant amount of training, including BIT, which is basic instructor training, which led me to Central State. So during my 9th and 10th year, then President Reagan had signed an executive order where if HBCUs and there's members of the federal government on the government team that qualified to teach at the collegiate level, they could do a MOU where the employee, in particular me from the Internal Revenue Service, would be lent to the HBCU. So I got loaned to Central State to recruit African American workers to individuals in the accounting department to come to work for us. But my loan was I had to I taught tax law, financial accounting, managerial accounting, and headed the accounting club and the NABA conference, the NABA membership on campus. So that was really exciting. In fact, it was so exciting, it propelled me to quit the Internal Revenue Service after my 2-year tenure there, because I seen the need in the community for individuals that had my skill sets, but necessarily didn't have the relationships with the professionals that they needed. And that's such an integral part in the development of your business. Most folk can do what they do extremely well, or they wouldn't be in business. But it's the little nuances, it's the relationships, it's the connections that they must have in order to take it to the next level. I am the Chief Financial Officer of a large not-for-profit in Akron, Ohio. I'm the Chief Financial person at my church, which is Mount Harmon Missionary Baptist Church. I represent people before the IRS when they owe a significant amount of tax or when they are getting audited. You name it, pretty much I do it. So I think I'm well versed to take a small or emerging businesses and establish or let them know what their basic needs are.
All right, that's excellent. I didn't know about the history, the connection with Central State as part of your background. So that's something new that I learned here today.
Yeah.
Yeah. That's excellent. So Ed, why don't you tell us what it is that what is a CPA, And then I guess to me it sounds like there are levels below that. You know, your accountant, your bookkeeper, you know, those folks. Can you tell us what the CPA is and how that all comes
Yeah.
together?
So a CPA stands for Certified Public Accountant. You must pass a rigorous exam. When I passed it back in a long time ago, 87, 88, I think, we had to take a 3-day exam. We were the first day I think was 5 hours, second day was 9 hours, and the last day was 9 hours. You were put in. All the people in America took the same exam the same day, and they all the scores went to one central processing unit. Took about 6 months to get your scores back, but you had to have a 75 and above, and it was extremely challenging. You could not use a computer. You couldn't use a calculator. You couldn't use none of the things that they could use now. And so you never went to these testing sites. You had to do it all there. That was such a challenging exam because now you have to have an MBA or a master's degree before you could even sit for the exam. You had to have a couple years of experience and before they would even issue your certificate if you did pass. I could give you statistics though. Last time I read of the nearly 800,000 practicing CPAs across the country, less than 0.5% are African American males. I could tell you this: most people will say I'm an accountant and all I have to do is pass the exam. That's not true. That's not all you got to do, because if you could, you probably would have. It's extremely rigorous. It took me 2 years of studying after my MBA and CPA to even sit for the exam, and then I had to take it a couple times before I passed it. So there is a distinct difference. You're holding yourself out as an expert, and because of the number of subject areas that you touch on that exam, you will be expert.
Okay, excellent, excellent. Wow. So, do all businesses, in terms of their needs, let's say a startup business, do they need a CPA? Do they need an accountant who doesn't have a CPA? Do they just need a bookkeeper? What are the needs for small
Um,
businesses?
so most people don't know the difference, so they don't know what to do. Most businesses fail on the front side because probably 50% of the businesses fail within the first a year, and a lot of times it's because of lack of planning, lack of infrastructure. Unfortunately, we don't have, when I say small businesses, they usually don't have the relationships with people where they could go and just ask the question. Because if you typically go to an outside CPS firm or a person like myself who hold themselves out publicly to practice, you typically got to pay a fee. And when you start up, nobody's trying to pay $300, $400, $500 just to talk to you. However, that's probably the wrong thing to do, because the key thing is entity design, entity formation. What elections do you make? Let me give you guys an example. When I first start working at the IRS, a lot of doctors were incorporated. So they would provide all their practice, they do their practice, they have a corporation, it went through that. But let's say a doctor, in one instance, failed to properly service a client, left a scalpel in them or something like that. So then the doctor would get sued, but then the doctor would say, yeah, you can sue me, but all you can sue is my corporation. You can't sue me as an individual. Well, back in the mid to late, in particular in the mid to late 80s, attorneys kept saying, no, that's not true, because you did not behave as a corporation. You didn't have monthly or quarterly minutes. You didn't do the minutes. You didn't do the filings and so on and so forth. So just because you are a corporation, you didn't follow state law and you didn't behave as one. That was so important, because now when they sued the doctor, they sued everything else he had. So if he had $1 million worth of $2 million worth of other assets, that guess what? Those assets became exposed. Hence came forth the limited liability corporation, who basically said, you ain't gotta act like a major corporation. You ain't gotta have all the meetings. You ain't gotta have, all you gotta do is register in an effort to make business transactions so much better. Now, even within a LLC, a limited liability corporation, there are still decisions that must be made on the front side, depending upon how you want to be, how you want to file your taxes. For example, a LLC can file one of four ways. A LLC can elect through a form when they first start out, they can elect to file a corporate tax return, 1120 return. They can elect, if it's two or more members, to file a partnership return, right? They can elect to file a S corporation return, which is a little bit, it's a hybrid of both the C corp and the S corp. That and the partnership. And then if you don't elect it and you're a one member, you default to a Schedule C, where the income and expenses are gathered on your individual return, and then you pay the taxes at that level. So the question is, how many people really know the behavior and how to do that? Well, normally they're professionals. So if you ask the bookkeeper that, okay, they're not going to know all the integral details about it, but they're real good at probably handling your day-to-day bookkeeping operations, right? An accountant may know it, I don't know. So it's really, in my opinion, is not necessarily the educational or I'm sorry, what their title is, it's what their knowledge is. And the only way you could independently determine what their knowledge is by the designations behind their name. And that's why a CPA, you're going to get that, because here's the thing. If CPAs don't do the right thing, we have the Ohio Board of Accountancy, and the Ohio Board of Accountancy has a division that if you don't behave, they kind of get smack you on the hand and tell you got to do better, or make you take some more CPE, and so on and so forth.
Okay, okay, excellent, excellent. So in terms of the cost, in terms of small business owners accessing those services of a CPA, would you recommend that small businesses just starting up, that they engage a CPA for all their needs, or just the initial setup, and then they use a bookkeeper? Or what kind of approach would you possibly recommend for small business owners to consider?
I think that the very first thing they could do is have a consultation with a CPA. I think they ought to put that in their budget right at the beginning. In fact, budgeting is basically planning, and planning is defined as what you do today to ensure the future. Well, if you don't know all the stuff that you need to ensure the future, then you got to meet with somebody. But Ambrose, I think you said something right, though. That is, after you do that initial consultation, get everything straight, I think you could then go to a bookkeeper, because you don't need that level of service until you reach another plateau in your business.
Okay, okay. So as we talk about this, the utilization, the need for the CPA, the accountant, um, us at Extension, Central State University Extension, a significant amount of what we do is also reaching out to agricultural producers, farmers, urban farmers, things of that sort. In your practice, have you engaged many before? Have you engaged many farming or urban ag businesses?
Not really in my practice. I remember when I was at the IRS, though, I examined a couple of farmers. And so that's how I have a background and understanding of what they do. But in today's environment, I really don't do much of that.
Okay, okay. That would be something, maybe we can come back around on a later session and maybe talk about that, or maybe one of your other colleagues in that space. I see that Amber, you have your hand up. Did you want to
Yes.
have a question or comment?
So I wanted to circle back to the uses and the differences between a bookkeeper and a CPA. I think that's important. And when you pointed out that you don't necessarily need that CPA for the day to day, you need it for the setup. And then when you hit certain plateaus, like for instance, going from a single member Schedule C, but now you might be at the income level to be an S Corp, or where that's more advantageous. Um, so my question is, when should that person think about, and how should they use both in their business? So that'll keep their initial costs down, but what are the spaces when they should use both, because you still need both, right, throughout the whole year. You just might need that bookkeeper more often on a day-to-day, but still, we still recommend that you have a
Mhm.
CPA for that
So
consultation piece.
okay, so when you meet with the CPA, you would want to determine the tax strategy, and the tax strategy would be how do you want to be how do you want to file your taxes? Let me give you an example. A person works a job, makes $30,000 a year, $40,000 a year. Okay, they then start a business, and based upon that, most businesses don't make money on the onset, right? So now they have a business, they put everything in, and just say they got somewhere, let's just say they got a $10,000 of expenses more than income. That would be known as a loss. Well, if you file a Schedule C, your $30,000 income that you made from your W-2 job will be on that form. Also, your $10,000 loss will be on that form. That's what they call tax savings. So now instead of paying tax on 30, you'll pay tax on 20, right? That's inherently what the difference is. But let's take it a little bit further. What happens if you make on your job, right? Because you really are trying to have a job, then to get away from your job to go independent, right? But now there's nobody there to take out the taxes and so on and so forth. So now you gotta have a payroll service, or you gotta file what everybody call quarterlies. Now, most people think quarterlies is some big long form you gotta calculate. The quarterly tax return ain't nothing but a piece of paper that you write your name and social security number on and send what you think you might owe the IRS at the end of the year. So if you think so, but most people don't know how to calculate that. So let's just make it simple. I've got a bookkeeper who runs a financial statement for me, who has it and says at the end of March, my first quarter, I earned $8,000. What CPAs do is take the $8,000, project the $8,000 over the next couple of months, or I'm sorry, for the whole year. So now they're going to project that you're going to make $32,000. They calculate the tax on $32,000. They divide that by 4, and now you send in 1/4 of the projected payment. Here's the reason why that's important. Second quarter, you do something else. You don't make 8,000, you make 2,000. So now we got to aggregate both quarters, calculate the tax, and maybe the second quarter you don't have to send in anything but a 0. You see, so that's the link between what's important between what a bookkeeper does and then what a CPA does. Did that answer your question?
Yeah, I knew the answer. I just
Oh,
wanted to
I'm sorry.
have it on our recording.
Okay, I'm so sorry. I'm sorry.
Oh, no. You explained it perfectly. That's why I was asking for our
Okay,
discussion
gotcha.
purposes.
So,
Because it's
so
important to know, right? You need to make sure that you understand what the different roles are and what your um and how to utilize everything to the best uh to benefit your business. So
exactly.
it's important to know those differences.
Yes,
Right.
yes, ma'am.
All right. Thank you, Amber, for that question and that response, Ed. I see Eric. Looks like you have a question.
Yeah, well, I would want to follow up. Again, I'm trying to be in the headspace of a small business. And I'm thinking the question might be coming up. What is that cost? You said factor into your startup cost, into that sort of runway, factor in a meeting with the CPA. And I'm wondering what kind of cost people should be building into their budget.
Right. It really depends upon the selection of the CPA firm. You got small regional firms, you got mid-sized to large regional firms. Generally, though, I will tell you they create what's known as systems, i.e., you walk in their door, it's $500, $700, but they're going to sell you on a system. But it's really needed. But the problem is you gotta kind of figure out what can I afford versus what do I need and what's the niche in the middle. But I would say this: you probably would ask one for the startup. Would be nice to call a CPA. Firstly, you ask your colleagues or people you may know, hey, what is your relationship with this one? Or whatever, do you have one? By the way, I probably have 90% of my business comes from just people saying, use him. I got a phone in my office here, and I don't even know what the number is. Because everybody calls me on my cell phone because I don't mind helping. And I barely advertise. I don't advertise. It's just the fact that I think when a person works hard to deliver a product and he listens to his client, that those folk will sell the business for you. So I probably have 300 or 400 clients. Probably could have more if I would have advertised, but not necessarily that's what I want to do. But again, try to call one, ask them all, call 3 or 4 of them. I need a 2-hour consultation, what I like to do, and tell them what you want to do and find out what their pricing is.
Well, when you mention that, it brings up another question: are there questions you think people should come with when they're going to call these, 3 or so, firms to ask them for a consultation? What kind of questions should they use to evaluate, if this is a legit, a good relationship?
Absolutely. I would say then, first of all, you want to come in the door with as many questions, no matter how silly you think that question is, as possible, because you on a learning curve. Second, you can evaluate the person by how he answers you. Would I feel comfortable if I have an issue to call that person, or how responsive he would be? But my clients got my cell phone number. Now, I don't remember them all, right? But they like the fact that even if they may only call me once a year, they like the fact that they can call me and they can get the answer. And then finally, I think that you have to ensure that when you're asking the people or asking the CPA, what do you guys do? Give you an example. Some firms specialize in auditing. Nothing but auditing. Some firms specialize in forensic analysis. Some firm specializes in tax. So when you ask them that question, you'll be able to see if that's a fit for what I really need. And what most people need on the first part is just general business advice. And if I do this, how does the tax impact me? What would the tax impact be? And they will help you do an entity selection.
Thank you.
Ed, a number of the folks that we work with and that we encounter, a lot of them are businesses, but a significant number also talk about wanting to do nonprofit organizations or social enterprises, co-ops or cooperatives. What kind of concerns or approaches or needs of a CPA would someone who is pursuing some activities in those areas, the nonprofit, the co-op, what should they be concerned about?
The nonprofit world is probably the roughest accounting world that it is. The reason why it is because it receives money from government, right? And as receiving money from state, local, federal, or municipalities or whatever, you would be subject to their rules and regulations. You are subject to the rule because they want to make sure that people don't steal the people's money. And so, having said that, it's probably extremely challenging. It is extremely challenging for them to behave the way that they want to behave. They have to have they have to have board meetings. They have to have proper authorities. They have to have conflict of interest, so on and so forth. But now, with respect to not-for-profit organizations, it used to be a long, tedious, arduous process in order to obtain what the IRS calls a determination letter. Normally good for 5 years, but a determination letter is you fill out a document, IRS determines that you are in it for a not-for-profit status and say you're good to go for the next 5 years. Used to be a long form. Now, just I think 2 years ago, they put it all automated. You go to irs.gov, their website, you put in one of a 501c3 or some level of not-for-profit. You click that, they're going to send you to another website. You fill out all the documents. It just goes next, next, next. And usually attorneys used to do that. But even before you even do that, the attorneys have to fill out your corporate documents so that you can upload those into the IRS document. So it is a lot of work up front. Is it worth it? Yeah, it is, depending upon what you're trying to do. But if you're just trying to save income taxes, that's not the model for you, you know.
Okay. Yeah, I mean, many times folks will, some folks look at nonprofits. When they hear nonprofit, they describe it as if it's an entity that's not going to make any profit, not going to generate a lot of money. But is that true?
Typically, a nonprofit always sets a budget, and a nonprofit, once it applies for any type of grants or funding, the budget will be equivalent to the cost it takes to deliver that service. The funder though usually can tell you whether or not you know have what they call allowable items that they say you can do, you can deduct or use, or you can't use. So in essence, they become your partner, which makes it extremely challenging, which makes it really, really tough on you, that you almost got to be perfect. You take that into effect, and then you realize you get money in from the state or something, and guess what? They get to examine you. In fact, we have a whole section of audit slash accounting stuff called for not-for-profits that CPAs must use. And when you do audits, and they are even twice, 3 times as voluminous as regular audits are.
Wow. Wow. Okay. Okay. So, if someone is interested in doing a nonprofit organization, when should they engage or seek advice from a CPA?
I think again, same time up front.
Sometime.
They'll tell you, but they're gonna have to secure. You really, Ambrose, you know, you could probably go down to the state of Ohio and say, "Here's the name of my corporation." They give you the name. I want to be a not-for-profit, and that's it. You know, and they're gonna send you your documents. Problem with doing that is the IRS wants you to upload your your original documents. They want you to upload your code of conduct, your articles of incorporations, to see if you are legit. And if you are, they will extend that not-for-profit to you, but it comes with a whole lot of strings.
Okay. Okay. Um, we had some folks. There were recently some changes in Ohio law where the state authorizes benefit corporations. Um, and I was wondering, it's new in the state. Have you started to see many folks using that status of a benefit corporation, where the corporation is organized for beneficial purposes, and it's not necessarily to maximize profit to the shareholders, but they can operate as a for-profit with the purpose of doing whatever that beneficial purpose is, housing or social services for young folks or things of to that nature.
Mhm.
And I was just wondering if you had started to see anything yet along that line.
Well, actually, it has always been in place. I do with some development tax credit deals where there's some development dollars, or a partner gives $20 million to build some affordable housing. And the only way they could do that, they have to partner with a not-for-profit organization. Although they got all the leverage and the money, the little bitty not-for-profit organization has to receive the money. So the little bitty not-for-profit organizations, though, they don't have K1s and all that distribution. But there's a law that says if you're a not-for-profit and you got assets and things that would be tax beneficial to a for-profit, the not-for-profit can elect to be for-profit just for that incident. So that's all the state is modeling. is the fact that, yeah, you may be a for-profit, right? But you can make certain elections in order that is not a taxable event. Let me give you an example. A housing homeowners association, right? That we collect dues, where everybody lives, they collect dues. You know that they probably should file, I think it's the 1120H, which stands for a housing organization. But the rule says if they use 90 or I think 80% of the funds that they collect, they don't have to pay any taxes on it. So it's all kind of little association rules that's always been out there. People just didn't know about.
Okay. Okay. Um, in terms of when you talk about these special elections and a lot of different nuances, have you seen any opportunities to engage with any cooperatives in the state, where I believe the IRS has some regulations, I want to say under Section 521 or something along that line, where co-ops, there are different deductions and elections that they can make.
Yeah, yeah. See, that's generally near the partnership section of the Internal Revenue Code, and so they pretty much treat them as partnerships. And there's a real distinct reason why they don't call them partnerships versus associations. Partnerships, anybody in the partnership has the ability to bind the other partners, and from a contractual standpoint, that is really, really significant. But in an association, they don't. So let's say we are in a partnership, and I'm going to sell these items to somebody for $20,000, but they are really worth $50,000. If a contract gets signed, you still got to deliver, and the other partners are exposed to what the partner did. So now they've got to, no, we ain't gonna do all that. So then start these quasi corporations or these associations. But even in the association, could probably be a member of association, could probably be a corporation.
Right.
So this is called layering. They start layering stuff because the ultimate game is to not have your personal assets exposed or at risk, because anybody can sue anybody. And even if you win, who wants to pay $10,000-$15,000 worth of legal fees?
Mm-hmm. Right. Okay. Wow, this is a lot. In terms of trying to bring this back, because we're getting really technical here, but this is important. Important things to know. If we come back to some of the basics again, in terms of business owners engaging accountants and utilizing them, what about the aspect of bringing on an employee, someone to work? A lot of business owners, or a significant number of business owners, they say, well, I'm going to hire them as a 1099. And so that's their approach. They're going to hire someone, pay them a flat fee without making deductions, and say, I'm paying this person, this employee, as a 1099. Are there any challenges with that approach, or any general advice or guidance you would give someone who is looking to bring people into work with or for their company?
Yeah, that model has been done and since the beginning of time, and the IRS has warned people about that, but people still do it. If you significantly control where they work, when they work, how they work, what they do, and you provide the items for them to work, they're an employee. So you could say that they're 1099, and you could say at the end of the year that, well, I'm going to give you a 1099 for what I paid you. First thing, though, I've seen happen is the person receives the 1099. They go to their preparer. The preparer says, well, it's 1099, you got to file a Schedule C. And by the way, whatever the 1099 says, you owe 15.5% of that amount for Social Security tax. If you were my employee, it's the same 15.5%, but employers pay 7.5%. The employee pays 7.5% of FICA, right? Plus is already taken out. When you go to a preparer, and they show you that you now owe that entire 15%, plus there was no withholding, first thing I've seen them say is, even when I was the IRS office manager, they go, I worked for that guy, right? And they gonna say, well, how'd you work for him? IRS has 20 statutory rules that they will ask the person and the prospective employer. And if by the preponderance of evidence, if you do, if you pass, if you are, or you violate those rules or whatever, you will be considered employees. Now, so what does that really mean? Well, now that means that the employer has to go back and compute 4/4 of 940s and potentially a 941s for those, and then one unemployment tax return. The employer is responsible now for both sides of the 7.5%. The employer is, but the employee probably don't have a job.
Right.
So see what I'm saying? So you may as well start off right now. I could tell you, I'm a small business owner. Here's what I do. Okay, very, very simple. Because most people don't have time, and nor do they even understand all the payroll stuff. I call a payroll service. I say to them, I just want to set up my employees, right? And then I want it done simple as possible. So whenever the payroll period's in, I go right online and say, pay Joe $2,500, and that's it. I hit go. It calculates everything for me. The city withholding, state withholding, federal withholding, and Joe's net check. Probably will cost you an average of less than 10, and less than 10 employees probably cost you about 150, no more than $150 a month. I like doing that because even as a self-employed, I have an LLC, but I'm an employee of an LLC. I like taking out money once a month than waiting at the end of the year to have to do that. Here's a little, I'm gonna tell you guys this. Here's a little tidbit to all of you out there practicing, or you in business for yourself. When you go out, here's real life. This real life lesson. Go out and try to buy you a car when you are self-employed. They're gonna ask you for, or a house in particular, credit card or whatever. They ask you, give me your W-2. Give me your W-2. Or if you don't have W-2, they're going to say, can you prepare quarterly financial statements for us to let us look at? So here's the best of both worlds. I would sign up for a payroll service, pay yourself $2,000 or $3,000 a month, whatever, because at the end of the year, you're going to have a W-2. At the end of every month or every 2 weeks, you're going to have a pay stub. The little trick is this, though. You don't have to have all the money in order to pay yourself a pay stub. Let me give you an example. I only say, pay me $6,000 this month. The taxes on everything is probably $2,000 a month. I say, I put only the $2,000, pay them only the $2,000 to take care of all of my taxes. The remaining check is $4,000. I never cash. But what I've done is created a situation where I can still maintain my credit. I can still go get some things, whatever, because I got a W-2 worth $60,000. So it is that kind of relationship that people can talk about, because they still must live.
Mm-hmm. Okay. And in that scenario that you just described, the taxes on that is being sent in. You're saying that's being deducted and
that
sent
$2,000
in.
that $2,000 I talked about.
Yes.
I'm giving it to the payroll company. They sending it to the state, federal, and local. So I get a W-2 at the end of the year. Yeah.
Okay. All right. I see that. Let's see here. Do we have any other questions here? Any
Let me share this with you. I think what's real important is the type of accounting system they use. Now, Intuit came out with QuickBooks, and so now everybody think they're accountant because everybody's on using QuickBooks. They kind of mess it up. But the bottom line, it is a great tool. It's an outstanding tool. I like my clients to use QuickBooks. QuickBooks Online. I go in wherever they're at. If they're having an issue, right, or somebody's having an issue, I can go into their system from my system and help them through that. I can help them figure out what went wrong and so on and so forth. But a bookkeeper can do that, can at least get you all your stuff signed up through QuickBooks, all right, and enter in that stuff. Secondly, I have all of them, if I can, I have them interface with their local bank. So their banking transactions are uploaded several times a day. So if nothing, if you got a hard time keeping records, you got a hard time with the gas receipts or whatever you want to do, you just swipe card and go through your bank. It then was uploaded to QuickBooks, and it sits in QuickBooks until it says, I'm waiting for you to tell me where you want me to label this, and you tell it where to label. Guess what you just created? A income statement. The first thing the bank going to ask you is what? I need an income statement. So you are actually creating an income statement without even doing much work. Your job is to, when you see the expense come through or that item, where do you want it to put it? If you see a deposit comes through, say, was that income from this source or that source? Where do you put it? That's probably the challenging part, is setting up the chart of accounts at the beginning. Again, the CPA or maybe even the bookkeeper can help you do that. And the chart of accounts must be meaningful to you. I will tell you this, I don't want my clients to come to me a lot from a bookkeeping standpoint. I would rather work with them hard on the front side, teach them what financial statements mean, how they get that, because if you want to be successful in business, you got to know what your position is at all times.
Right. In terms of that, that chart of accounts, they new business sits down with the CPA, gets the chart of accounts set up, then they can engage a bookkeeper to help them with the day-to-day record keeping. So when you talk about this QuickBooks Online as a tool, and you're saying to allocate the different transactions, are you saying for the bookkeeper to do that or for the business owner to do that?
Actually, you know what I'm saying? Who knows their business better than the business person? See, it's really the bookkeeper. So really, excuse me, what I'm trying to get to, it's really best for the business owner to go in there. Like today, I'll go in and look and say, oh, I made 8 business transactions. It'll say, I don't know, it could say Staples 25. I'll click it, hit Staples. I'll go, oh, let me click that office supply, click, and then it gets moved over into my balance, into my income statement. So what I'm trying to tell you is this: if you set it up on the front side, you actually save your money because you really don't need nobody to tell you how to click. You feel what I'm saying? You really don't. What you do is, though, what you will need, and what I recommend, is that the bookkeeper takes, at the end of the month, when your bank statement comes in, do a bank reconciliation which ties all of the transactions to your amount in your account in your system, so that you ensure a couple of things, that you don't miss something. Another thing, that somebody didn't steal your money. So, or it wasn't an excess deposit, because it's so easy to identify and correct a loss in the month that it occurred. Then 6 months later, when you go back and say, I didn't do that, now you cannot remember it. Those are called monthly closeouts.
Okay. All right. Eric, did you have a question? So you came back in.
Well, so yeah, I'm just trying to think about some of the folks we've been working with recently, right? So if I guess any advice, like let's say somebody did not go through the process as we've been discussing here, right? And so then set up, book of accounts. They've been doing their own thing, just cash basis. It's a side project, farm, project. And so now they haven't been filing the 990s and those kinds of things. Like, how would you recommend somebody to go back and kind of figure this thing out and get themselves in good standing going forward?
I would always say, tell the truth. I would always say, whatever letters, documentations you get, wherever your issue is, let's go in and let's clean them up. I wrote a article in Black Enterprise. Man, that must have been 25 years ago. But I wrote the article about offers and compromise. I was on an executive committee where they were saying, look, why are we sending revenue officers out to collect money to people who ain't got no money? That's just stupid. We wasting the government's money. So we came up with this thing called offer and compromise, which is a correction tool, which you just described. And what it basically says is this: okay, offer us an amount that you can afford. Guess what it dismisses? It could care less what you owe. You could owe 8 million, you could owe 800,000, you could owe 80. They don't look at that end. They look at where you're at right now and where you projected to be. They use a projection tool, about they use one. But it's very, very subtle. And then they say, we'll take that. I had a client, I got him offer done for 25,000 and he owed slightly less than $1 million. So again, these are tools that are designed to help you. But here's the deal: you will see this stuff come on TV. Tax Pros of America, blah blah. Man, them folks, listen. They make you do all the work, and they don't really explain it to you. I have a process I go through, and I'm gonna tell you whether you're wasting your money with me or not. But I'm also tell you, oh, this is what you got to do if you owe money. So again, that's more of a relationship. You know what I mean? You got to find the right one that that you feel comfortable in talking to, and that knows. A lot of them don't know. Oh well, I seen that form. Yeah, but there's a strategy to everything.
So this offer and compromise approach, say in terms of resolving matters, some of the matters with the IRS. What about when we talk again about the nonprofit sector? Someone who is looking to operate a nonprofit, they set up their entity under state law, but they start operating, but they don't file a Form 1023. And then at some point down the line, they decide they do want to do the Form 1023, but they are told that it's been canceled for failure to file 990s or something along that line. Is that
so they would have never been required to file a 990 because they never filed a 1023, so therefore they never got their letter anyway. If they tell people that they're a not-for-profit and they didn't completely fill out all the paperwork, by default they are an 1120 corporation, and the IRS would say, we don't want no 990 from you, we want an 1120 from you, and then you could go ahead and you could file for a 1023. But they're so simple now, because if you fail to file your 990s, if they give it to you over a 3-year period, then you are automatically revoked. Automatically. You get a letter, automatically revoked. And so, but here's how they made it easy for you. You could even file if you had a not-for-profit, it didn't do any business that year, so you don't want to file a 990. By the way, there's something called a 990 EZ, which is even smaller than the 990. But even if you had no business, you go online, you could file a 990 postcard. That's just a piece of paper that says we're still in business. That's it, and they would consider that as a timely file piece of advice.
Okay. Amber, we are getting close to our end. Amber, you have a question?
Yeah, I just have a quick question. So one of the things, if I'm a new business coming towards you, considering you to do my CPA work and all that strategy, what is a good question that you would expect? What kind of questions can I ask you to vet you?
Wow, that's a good question. I would ask about the experience. What is your experience dealing with small business? Describe your business and say, hey, what advice would you be able to give me in order to help me, to enhance me, to put myself in a position where I will be ready in case something happens. Let me give you an example. I hate when people come to me and go, I need a financial statement because the bank said. Oh God. Because if the bank said it, that means you only doing it because the bank. That means you didn't follow none of the business models that said that you should have that. And guess what? Every time it is real challenging for me to do that. But I don't want to dismiss your question. But I think it's a part of asking that person what experience they have in dealing with people like me. Okay, I ain't got a lot of money, right? Okay, I'm a startup. I'm a novelist at this thing. This is what I do. What could we do? How could we work together to enhance my position? And depending upon that response, is you as got to make a judgment on do I want that person, or can I really think that he may be a great guy, but might not be able to deliver things. I learned it over time. I have to be clear, concise, because I don't want that person to say, Ed Dudley charged me that money and I didn't do it. Right? That for me, it don't work like that. I want that client to say, wow, he really helped me out. Because guess what? I don't have to advertise now, because they advertise for me, because I try to be so honest and appropriate with every client that I have. I don't care if you're a garbage man or I got guys that one of my football clients signed $24 million. He was the worst client I had. Okay. Because he was so used to, but the bottom line is he always, because when he started putting together his trust for his kids and so on and so forth, the lawyers asked him, say, who do you want over your trust? And he said, Ed Dudley. He said, why? He said, because I trust that guy. That's the best compliment I ever got.
Right. All right.
Yes. Thank you. Thank you
Wow.
for that.
Yeah. I think
But yeah,
Ed, we
word of
want to.
mouth is your best business champion, right?
That's correct. That's
Oh
correct.
yeah, definitely. Well, Ed, we want to thank you very much for sharing some time with us.
Sure.
This session, it is being recorded. It does become part of our library of sessions that we offer to entrepreneurs and agribusiness owners online. Again, we just want to thank you for helping us today by sharing your information,
Yes,
and
sir.
we look forward to maybe engaging in the future.
Yeah, no problem. If you want, I'm in Columbus, Ohio. I could be reached at area code 614-679-1991. That is my cell phone number. I'll be more than sit down and happen to talk to you, anybody that is just interested. Even if we do a Zoom call or just some kind of conference call. Okay.
All right. All right. Thank you very
Glad I
Thank
much.
could be of
you.
help. Okay. You guys
Thank
have a
you, Ed.
great day. All right.
You
Bye
do the
bye.
same. Bye.